Fantastic today. Let's analyze the situation altogether for the price of Bitcoin. Let's see what's going on the charts. We did just recently hit those local highs, getting a little bit of a rejection, but I do think that we could be going to higher levels. Now, a quick reminder to everybody here on the stream. First of all, smash up that like button, guys, on your way in. And we'll be analyzing altogether the situation here for the price of Bitcoin. We'll be going through the comment section, saying hello to everybody. And just to be clear, I am no financial advisor. Nothing should be taken as investment or financial advice on my videos or live streams, guys. I'm just a guy on the internet that's just sharing his own personal opinion. Let's go right away through the comment section, say hello to the beautiful community, and put some background music, and let me know if you can hear me, if you can see me. I got a cap on today on my head, guys, because my hair's a bit of a mess. Okay, I went to play tennis this morning, and I know it must, probably looks a bit weird, but yeah, didn't want to comb my hair. So let's go right away through the comment section and say hello to the beautiful community and see what's going on, guys. Let me know if you can hear me and see me. For the moment on my end, everything looks clear. Let's go right away. Say hello to the legends. Locally here on the price of Bitcoin, looking quite interesting. We just created a very, very local internal SFP. I have to say, I missed the entry on this one. Missed the entry. It's a valid sniper trade, I have to say. It just gives you a good entry, always. I like this area, for topping formations. I do think we could go to higher levels. We'll be explaining a little bit of the structure. But the good thing about these SFPs, they just give you a good entry, right? If you do get the rejection from the local highs and you have time, you literally have a minute or so to get in. If you're not in front of the laptop, the computer, you can't get that solid entry. So it would be a little bit of shame if the price were to crumble down from here. But if you're entering right now, well, your stop loss is getting a bit too spread, right? We are at internal local support levels. VWAP, session VWAP is trying to hold here as support more internally, right? We are sitting above the VWAP. Now, I do think that price, could actually hold this area and claim the highs, right? There's going to be a lot of shorts trying to enter the market as well, okay? With this swing failure pattern, basically from the local highs, and it doesn't seem quite right. This SFP, I mean, the only solid way that you could, basically structure this movement to the upside to be a finish 5 waiver would have to be some kind of a contracting diagonal, right? It doesn't, it doesn't look too great. You got a bit of a 1, 2, 3, 4, 5 right there. Yes, if this were to be the top, this were to be a wave 4 in a running flat. And basically this is the 5th wave. I'm not buying it. So I would not short down here, especially when we are at support more internally. But these SFPs, they just give you a good entry, and you can be defensive. That's it. If you're in front of the laptop, then or computer or phone, it's always a valid possibility if you get the rejection to enter on the rejection. But you just need to be in front of the laptop. Anyway, let's go through the comment section. We'll be taking a look at the slightly higher time frame, see what's going on with this formation. Is this momentum bullish or is it corrective? What are the highest probabilities, right? This is what we do take a look at here on the videos, on the streams, the probability side of the momentum continuing to the upside, more locally on the lower time frames. Higher time frames, what are we expecting? Is it higher probability that the low is in and we head up to all-time high in the coming months, right? We ain't gonna speculate on that, guys. We're taking a look at internal movements. We're zooming out at the 4-hourly time frame at the most and trying to figure out what are the possible next moves, right? And possible trading setups that I am looking for, all right? For the next coming days, next coming hours. Happy Friday to everybody. Hope you do enjoy your weekend. Make sure to destroy that like button, leave your comments, all right? Because I'm going to go right away and read every single one of you and say hello to the beautiful community. I'm doing pretty good, Christian. Much love to you. First, thank you, Andy. You're very welcome, my man. Oh, yes, oh, yes. Zuman, how are you doing? Welcome, welcome. Menno. Hey, all. Mike, how are you doing? Hey, Andy, my man. So good to see you live back. Umaya, thank you very much. Much love to you. Cool, Beckham. How are you doing? Are you all ready for some Bitcoin live analysis, says Menno Production? Absolutely. Yo, good afternoon, Master Ghoul. Looking forward to seeing you. Thank you very much. Got my mother here always giving love and support. How are you, Andy? How are you doing today? I'm doing good, Staffer. Much love. Nice to see you around in the comment section. Just want to quickly say hello to the community, okay? And then we'll crack on with the Bitcoin analysis, right? Let's see. Let's figure out what's going on. Do we go higher? Do we go lower? Where are the possible rejection points? Where are the possible bouncing points, right? What kind of Elliott wave structures could we be forming? Right, we always have to have the conclusion of we could be forming A, B, or maybe C, you know, and obviously these scenarios do give us a little hint, right, on where I could possibly position the microphone. What's going on with the microphone? Oh, microphone is not looking good. Microphone is bearish. Microphone is bearish. Yeah, hang on a second, guys. Let me just figure out the microphone. I got this fancy microphone here. Give us a second. Give us a second. Oh my goodness. Every time I come to this studio, I have some issues. Right. Wow, this is incredible. Yeah. The sound must be very, very bad, guys. Give us a second here. The sound must be... Okay. Mic is good. It's the internal microphone. It should not be great. Give us a second here, legends, to see if I can fix the microphone and we'll have a better sound. Every time in this studio that I come, we always have some technical issues. If not, I'll just... Good, I'm not going to touch it very much. There we go. Yeah, it must have improved a lot right now. There we go. We did manage to lock in the microphone. I'm going to be very, very careful because it's very sensitive. Let's go right away. Mic is okay. No issue, Andy. All good. Mic is good. Mic must be really good right now. Now our audio is good. Yeah, okay, very cool. 106k and down. Interesting. We're quite far away from 106k. Anyway, Nico, let's go, legends. Nico, much love to you. Nico did ask me today in the pro community about this local double top, triple top. Nico was looking for this triple top scenario. And I have to say, if the prize stores give you the rejection, you can always consider getting into that, SFP. Why not? However, when you form such a larger range like we did in the last 24 hours, it is common to potentially get that breakout, because when you take a look at this range, if you're trying to detect a pretty solid 5-wave move to finish a wave, an impulse, right, for a 5th wave in this case, we would be looking for a 4th wave and a 5th wave. It's not very common to, find a very solid 5-wave move, because if we take out, if we consider this low or this low, you need to have some kind of a 5-waver to the upside, right? If not, you just have a larger corrective structure, All right, even if you take out the lows and maybe get a bounce, that's possible as well. When you form a range, you know, the price does like to take out highs and take out lows, right? Because if you're moving up, you're going to get a bunch of longs entering, and it likes to get the rejection before the breakout, might form a higher low, or it might sweep the lows and then go, right? You just need to consider all of these different scenarios. But if you are literally saying, okay, could this be the high? Well, you know, when you take a look at the local range, you literally need to find out if you have a solid 5-wave move up, okay, to give you that potential probability that the high is here. This is a solid double top and we're going to go lower, which I don't see it clear. I don't see this being the high very, very clear. And the main reason why is because I can't see a pretty solid 5-wave move. The only one that I would accept, obviously from this low, if we're going to count a 1, 2, you know, maybe 1, 2, 1, 2, and this is going to break out later on. That works. That works. From this low also, if you're going to be forming a running flat situation here, that also works. 1, 2, 1, 2, breakout. If you have formed a triangle, that also works. This is the triangle that we were talking about here in the pro community, where there's higher probability of taking out this high at some point when we were trading in this area. But, you know, a triangle here works very, very well because from the highs of yesterday, you literally have a perfect 5-waver. You know, you can't get any more perfect than this when you're looking at a solid triangle. Inside of a triangle, you want 5 waves, okay? A, B, C, D, E. You don't have a triangle with 8 waves or 10 waves. A triangle is always formed by 5 waves. Yeah, you could have some internal waves on the lower time frame that can, you know, mix, you know, or have very much zigzag up, zigzag down, zigzag, you know, and it's very, very choppy and overlappy. And you're like, well, you need to go zoom out a little bit and figure out if there is 5 waves. But a triangle, to be, you know, sure and have higher probability that this could be the low, you need 5 waves from the high. You need 5 waves from the high. That's it, right? And you do have 1 from this high. This was the high of yesterday at 91.9. You can't have a triangle with 4 waves. It's an not completed triangle. You can't have a triangle with you know, a lot of waves, because you're possibly looking at something else. The triangle needs to have 5 waves. And from this pivot high that we had yesterday, you got 1 higher low, lower high, higher low, lower high, higher low. That could be the end. That's your invalidation of the triangle. So anybody that's, you know, wanting to get into a triangle trade, the best way to do it is get into the 5th wave, the E wave, not get into the breakout, right? Obviously, you want to get inside, in this case, of the last higher low of the triangle, the last 5th wave, to get a good entry zone. Invalidation is the low here. So, because if you're long in the breakout, right, very, very classic, you know, it might work out. You might get a big push up, shallow correction, and then continue, of course, but it's not always the best option to long a breakout of a lower high resistance trend line, right? You want to get inside of the lowest pivot of the triangle to already be in the position, right, before it attempts breaking out. So obviously, you know, literally the triangle, the common area to get in a triangle is in between the 618 Fibonacci and the 0.88 Fibonacci. Those are the common targets from each pivot to get the bounce. And obviously, you cannot speculate on a triangle when it's incomplete. The moment a triangle looks interesting is when you formed the D wave, when you already have 4 waves. When you have 4 waves, all right, and you're coming from a major uptrend inside and they're contracting each other, then that is the moment that you can speculate on a higher low. That is the moment that it looks very, very interesting. And for the brave, if you are believing that this is the triangle, okay, it does give you an option because you literally don't want to get back beneath this low. This would be your internal invalidation. So I would say, getting down here at the golden pocket, 7/8 Fibonacci, is a valid entry zone, because I mean, when we talk about invalidations, your stop loss literally is if you're entering somewhere in this zone, your stop loss is literally that low. You just need to accept that if you're trading a triangle, you're either longing the E wave, right? Because you do have 1, 2, 3, 4, and you can speculate on the fifth wave, which common area is the golden pocket to the 0.88 Fibonacci from your last wave up, which is the D wave. You're speculating on an E wave, and where it usually bounces is either golden pocket to the 0.88 region, which we basically hit the 7/8 Fibonacci or so from this movement up. So you can look for a long here, and if you get that first attempt, you SFP, and this is a classic moment where there's a lot of shorters going to enter believing in a double top. But then you have the Elliott wave pros out there, right? They would say, you know what, this might be the first wave to the upside, and what we could be speculating on, right? Because nobody knows at the end of the day. We just look at patterns and how the price develops based on probabilities. And if this were to be the correct count for the triangle, well, what you would be speculating on here is that this is your first leg to the upside. That's your wave 2. You're looking for a wave 3, 4, 5. You're looking for a breakout. You're looking for a movement to the upside to get developed in the next coming hours, if this is the correct count. So yeah, I mean, I would favor this scenario. This is why this double top right there, I mean, it's a valid entry for a scalp. You're coming down to the VWAP, but it does look like this could squeeze out and try and hit $93,000 possibly right throughout the next coming hours, and maybe even higher. Maybe this wave 3 is going to push out a lot. Maybe it's not going to push out that much. It's going to be shallow. Maybe we just don't know. What you do know is levels of resistance that you have up here, and what you want to see is the end of the wave 3 with high amount of volume create that sideways consolidation, and then as you take this high with decreasing volume coming into the resistance, such as the yearly open, that's when you can speculate, okay, maybe this is the area which you actually have some pretty interesting lower highs, which I'm going to point out right over here, from a few weeks ago. These lower highs right there, right, which is from the 18th of November and the 20th of November, which is the yearly open or previous year close is actually in between these levels. That's where it becomes interesting. If you were to get a push out here with high volume, I would not be interested in looking for a short as the price breaks out, right? You're breaking out, you're increasing with volume, the momentum is bullish. So, with this triangle pattern, if you didn't get into the E wave, you could possibly speculate in this area. Your stop loss is here. Stop loss is hit. Just, you need to live with it, right? You would be risking maybe 1%, maybe 2%, right? Over 3% is already really pushing it. But that's your invalidation. If the price comes down, you realize that this was not a triangle and you just want to be out of the market. Anybody that is attempting to, long in this area and add to the position, you just don't know where the price is going to stop and create a reactionary movement if you lose this higher low, right? You don't know how aggressive it's going to be, which is the level that's going to SFP. Is it going to be this one? Is it going to be a naked point of control that we have from this zone that we had on Wednesday? Because there is a naked point of control there. That's an interesting level to consider. Taking a position, right? This one right over here, naked point of control. So, yeah, the thing is here, right? What I want to be clear, trading is very much a patience game, and if you miss an entry, you miss it, and you look for the next one. So the point is, I am not too interested in shorting like in this area, right? If we do get a move up, there is a good chance the price will squeeze out. There is a good chance that the price can just squeeze out a couple of $1,000s to the upside. Maybe one, maybe 93. It might stretch to 94. You know, you just realize that the price could snap out from here. And if you were to take these local highs of today in the next coming hours, you know, and you maintain above the high, I wouldn't be a fan of trying to short anywhere in this zone, just because I have a reason to believe that the price is going to push up here. And why do you have a reason? You know, why? Well, it's all looking at the probability side, right? When you do form a very large consolidation after a significant move up, I mean, this was a pretty nice move up that we did have on Wednesday. When you form such a large consolidation that looks very corrective, one option here is the triangle. We can go on several options right away, but one option that looks more sexy, that looks pretty much developed, would be a triangle. If you have a big leg to the upside and you have a triangle-y structure that you can fit in on the chart, you realize that there is a good chance that the price can squeeze up to higher levels to form a new fresh wave. This is why, you know, it becomes a little bit risky to look for shorts on the next push up until you finish the third wave and you start consolidating and claiming the highs, right? The best example that I could give you with this explanation is basically this movement to the upside, right? Where you have, you know, a possible big range, and then obviously you end up moving up with high volume, right? After that high volume is where you're looking for the correction, and you're looking for the last fifth wave, right? Which is, you know, getting exhausted to then either get a big correction or a sideways correction. And as the price has proven itself to have a sideways corrective structure, you know, the probabilities of squeezing out from the highs are increasing. And you might think, but why? I just don't get it, right? Well, it's just, you know, you form, this is another wave, right? When you have this push to the upside and you form a sideways corrective structure, you realize that you can pop out from these highs, right? It can end up popping out, even though if you SFP from the local highs here, you know, you're probably looking for the wave to continue to the upside. So this is why, I mean, it's without a doubt a valid SFP entry. You know, even if the price were to come up here and loses the level, if you can get the entry and the stop loss and you can, you know, moves down, it's an entry, right? It's catching the highs with the rejection. If it does provide the rejection, if it doesn't provide the rejection and you're trading above the local highs, right, of the range, you just need to let the price go, right? Let it go. It will get exhausted at some point. You're going to get some kind of a corrective move, right? And then you possibly forming the last move to the upside. But in a nutshell, what you want to see is a 5-wave move. You want to end up seeing a 5-wave, a bit of increasing volume on the push up, and then get exhausted into levels of resistance. Now, the best level of resistance that we do have here in between 93 and 94K area is the yearly open. I want to see the price chilling for a bit in a wave 4, and then the last push up with decreasing volume, you know, would be an interesting attempt. However, well, what are you going to say if the price rejects from here? We've got other scenarios as well, okay, eventually, but this one's looking relatively interesting. This one is actually looking quite interesting to form a higher low here in this golden pocket to the 7-8. Especially this move up, the latest move up that we've had in the last few hours, does look internally like a 5-wave move. You know, it actually looks pretty damn sexy. for a 5 waiver, because when you do have this low right over here, you can clearly see you got the first push up, a little consolidation, the biggest move with high volume, and now you got this nice larger range than your wave 2, right? And then you got your wave 3 double top scenario. So this does look pretty convincing on the 5 minute as a 5 wave impulsive move up. I would consider this movement to the upside as a very, very shallow wave 5, right? Because if you are comparing, if you are going to be looking at all of this as a wave 4, right, just out of speculation, you got possible wave 3 or a wave A, and this is a B and this is a C. It doesn't really matter. I mean, this is a separated wave from this movement up that we had, right, on Wednesday, right? It's a separated wave. Could you class this push up as the end of a wave? Well, looking at the proportion, I would really not class this as an A wave or a third wave, a fourth wave and a B wave, and this was your wave right there, right? It's like very, very shallow, very quick, but it is a 5 waiver, so it just wouldn't fit with the proportion, right, of the previous timing and waves. Okay, so you could give that extension of the price, climbing up here to develop itself, and then have a more symmetrical move up when you zoom out. So this is why you would speculate on the very much a good possibility that if this is the end of a triangle, that you could very much squeeze out in the next coming hours, right, to form that, that 5 waiver throughout today and tomorrow, give or take, right? So, I mean, this is the one that looks more likely for the moment, as we do see, and it's not about being right or wrong. It's knowing exactly where to enter. This is a valid entry. Stop loss is the low. You got the first move up. You got a 5 waiver in a triangle here. If you did not enter this one, you can aggressively look to enter here, at the 91.2k, and this is your invalidation right over here. So it just gives you a few options. It doesn't matter. As traders, we speculate on patterns. We don't know exactly. We don't have, I don't have a certain scenario that is going to happen. You can look at the probability side of it, which this does look like it does have a good chance that it could squeeze out above $92,000 in the next coming hours. And what you need to know is, where can I enter and where can I have a stop loss, right? This is the most important thing in trading, having a valid structure, understanding the probability side of it, and knowing where to enter, right? Managing risk. You don't need to go in like with, a huge amount of capital. You can go in with, you need to test out your experience and your knowledge, right, with trading, and obviously create those plans. And this is why this movement down to the golden pocket, 7-8 region for a valid wave 2, it might go sideways ever so slightly. You might form a triangle, not a triangle, because if a triangle is not valid for a wave 2, but you might form, a little bit of a shaky out zig. Maybe the low is in already. Maybe you do this and you sweep the low ever so slightly, and it forms a little, zigzag right there. A local double top here, double bottom, would be an attempt. I would reattempt this scenario if we come down here, because this movement up does look impulsive, but that's my guideline. If you claim this low without claiming this low and it forms a double bottom, I would reattempt this situation because I am a risk management beast. I know exactly what the price needs to do here. I have a plan. If I'm in front of the computer, I would attempt this. I mean, the low could be this one over here. Why not? It's already retraced to the 7/8 Fibonacci. But just so you understand that, you know, today in the Legends Pro community, I was talking about a triangle and that we had high probability in taking out this high. And the triangle scenario is the most interesting one, just because it just fits beautifully as a 5-wave move here. And when you break out of a triangle, you know, this is what traders, especially new traders, don't understand. They'll just look at a random, you know, they'll just look at the trend line and long here and, you know, maybe a stop loss here or maybe a stop loss inside of the triangle. I've heard that, I've seen and heard that before. You know, have your stop inside of the triangle. We should be, you know, flipping the lower high resistance into support and stuff like that, right? Well, if you have a little bit of more Elliott wave knowledge, you do realize that there is, you know, the possibility of retracing down to the 50% 7/8 Fibonacci, if that has to be your low. And your invalidation is this one. There's no more to it. Does it have a possibility? Absolutely. If you have a good entry here, you know, you've got a shallow stop loss, you are targeting the highs, you are targeting for a potential wave 3 that squeezes out a bit more and manages to push through, give or take $1,000, right, or so. You know, you got a pretty decent projection. So yeah, that's a little bit of what we're looking at here. It does look quite interesting for the price to potentially, you know, claim the highs again and maybe get a bit of a 5-wave move to the upside. That doesn't mean that you're going to long here just, you know, a few $100s away from the highs. You know, you either get in the pullback at the level, so you got a better entry and better risk to reward and better risk management, or you just, you know, you take it as a missed trade. So yeah, that's a little bit of what we have here. You know, this is this internally on the 5-minute. We can do a little bit of higher time frame scenario, but if I would be looking for a short trade, which I am interested in shorts mainly at the moment, unless, well, local longs look interesting as explained here, but you know, internally, you know, if you didn't get here at this low, I would treat it as a missed trade at this point, right? Because it's a scalp. You're targeting the highs. If the price comes down, the only re-entry that I would consider is that if you form a local, very local double bottom here. If you lose it, then that's it. You know, just no more. There's no more to it. But if you get a small little reaction, you just have such a good entry zone and a good tight stop, and you're projecting the highs. It's already a, you know, 4-to-1 risk reward, give or take. So yeah, I mean, this is the thing, you know, where you need to have a secondary plan. If you lose this momentum, if you you know, that would be one plan that I would be looking at here when I'm considering intraday setups, right? You either long this E wave, or either I long this correction down to the golden pocket 7/8 zone. Would not be interested in longing on the movement to the upside. It's just not worth it. Where you're going to put your stop loss, it's just a bad entry. Risk to reward is bad. So as an intraday scalp day trade, you know, you literally, if you didn't get into the levels, you don't want to get in when you're just a few $100s away from the high. Just consider it as a missed trade. That's it. You know, you look for another plan. If the price were to come down, this is a secondary option. Just because this movement down has been pretty flashy, pretty, you know, quick, you could consider a revisit of the lows. You know, shake out a bit of the longs. You're very, very close in hitting this low. You need an instant reaction. That could give you an entry before it bounces if you react here to this low. And if you lose it, that's it. It doesn't matter, right? You didn't enter the long. Short here, where we at? I'm not liking this area. Me personally, for a short trade, obviously your invalidation is the high. You know, anybody who wants to short here a lower high, I'm not liking it because I just like the sideways triangle move and the possibility of a 1, 2, 3 breakout. It is an SFP. You've tested the highs. CVD, very important to see. You got a bunch of shorts entering. That's good. Lots of shorts entering here on Bybit, which is good eventually to get this bounce and take out the local highs. Because this is a very, very common double top, right? Well, double top. This is a very, very common area that you're going to get lots of short interest. Lots of people wanting to short here. And, it's inevitable, right? It's just a nice, good. It's getting exhausted. It's forming a range. You've claimed the highs for a liquidity grab. And then you got, lots of shorts entering the market. You got a bullish Elliott wave theory scenario, which is a triangle. And you got the first attempt breakout, which would be your wave 1 and your wave 2 being developed. And then, then you break out in the third wave, right? Because a lot of the times at resistance, a lot of the times you don't break out on the first attempt, right? It just happens. It's a natural thing that happens on the chart where you have a major pivot high from yesterday and you have whatever corrective structure that has happened in this zone, and you're going to get the movement up to test the highs, and the first attempt fails, which is very, very common. And that first attempt, when it fails, it's usually a wave 1. It's a first attempt wave 1, and the one that breaks is usually the wave 3. And then obviously you get the 4 and 5, right? You get that 5-wave move to the upside. So what is interesting about this, the first attempt breakout is that, you got a chance to enter if it's going to fail the attempt, because it doesn't always happen, right? You can have a wave 1 like this and then a correction. It actually breaks up pretty aggressively, and then your wave 3 and it's more aggressive, right? But a lot of the times you would create a double top scenario here from yesterday's highs, and that would give you the possibility of a wave 1, 2, 3, 4, 5, right? So in your second wave, if you do have a sideways corrective structure, as the common corrective Fibonacci levels for a wave 2 is in between 50% and the 7/8 Fibonacci, you are looking for this zone to hold, literally, right? This is the area that you want it to hold, right? And your invalidation is obviously that higher low at 90.8K. So just a brief explanation here. So, would I consider, I'm interested in shorts, if you did not long, either here or either in this zone, I would consider this as a late entry. I don't see a clear short because of this sideways correction, unless you entered an SFP here. Yes, I could be completely wrong based on my bias, and this forms a lower high and it moves down. But then we would have to create another plan, right? I would say, guys, I missed this lower high for a short. So I would want to see, potential levels that could hold here for a liquidity grab and possibly an SFP. So it's all about creating 3-4 plans, right? And having an idea of what you're looking for, and then, execute that plan. So for me personally, for short trades, what I would want to see is either the move up, forming that third wave up, right? And then the 4, 5, right? Wherever it goes. You just never know where the third wave. Most common target zone is the 1.618 extension from your wave 1 and your wave 2, which in this case, it would be just sitting below $93,000. But you need to see the stop, right? When you form a third wave, you need to see the sideways shallow pullback, common wave 4, to then on the wave 5 be interested at levels of confluence. In this case, I would pull out the lower highs that we do have from the last 2 weeks. You got one right over here, you got one slightly higher, you got the yearly open, that would be interesting. It's a plan, right? It doesn't mean that it needs to happen, but that's what you would be kind of looking for, right? If you get the biggest move up here happening in the next coming hours, and then you get a little range, right? Wherever, I mean, this is just a guidance, right? You are going to see the price stopping at some point. Doesn't really matter, right? That's the thing. When you know about Elliott wave theory, you know when you need to be patient, right? You know that this could squeeze out to higher levels. At some point, it is going to stop, because nothing's going to shoot up here to hit all-time high, in the next 24 hours. It's just not. It's going to stop at some point. And once you form that range and you got that gap between the range highs here, you got that possible wave 1, 2, 3, and then you're looking for the fourth wave. The fifth wave is the one that looks interesting to hit a major level of resistance to then speculate on your entry and the short for the reversal. So that's what I would be looking for based on if we squeeze out here, right? Which I don't know if it's going to happen. We do have a larger range. We do have other options. Maybe this is the high. I don't like it to be the high based on this fits better as a triangle. It fits better as a first attempt push out. And it just makes more sense to consider that the price, could squeeze out a little bit further to the upside. So yeah, I mean, that's what I would be this is how I would create my trading plan for a short in this case. If you did not enter the SFP, right, from yesterday's highs. If you are feeling brave enough and you feel that this is a legit double top, and you are happy that to believe that this is the high, and you want, you're looking for a lower high in this region, right? Your stop loss is the high. I just don't like this, just because I don't like this pivot to be a high because of how we got up there and this big fat range. When you form such a large sideways range, I am looking for a bit more of an extended move to the upside. Me personally, of course, this is my personal opinion, and that's how I view the chart. So we'll be a little bit wary here about shorting based on this. Would like to see that push up to getting to the 93k region and get that wave 3, get a sideways momentum, then look for the wave 5 to get exhausted into levels of resistance such as the yearly open, these pivot lower highs, which are beautiful for a liquidity grab. Come on, I mean, higher time frame lower highs, when you can figure out that you could be forming your last wave up, then that's how you would execute the entry. Basically, I'm waiting on the wave 3, wave 4, and 5, into this area, right? But you need the fourth wave, and you need that third wave to finish, and you need the range, and then the last wave up into levels of resistance where you could speculate on looking for the short. As long as the third wave hasn't finished, you could be looking at a massive third wave. 1, 2, 3, goes to the 2.618 extension, goes to 94k, maybe 95. If it just rocks and rocks and rocks and continues going higher, you need that stop. You need the stop. You need the first stop, either here to create that fourth, fifth, create that fourth or fifth. You need that stop after the third wave. So other options that we do have, I have to say that I kind of don't like for this to be the high based on the sideways corrective structure. I cannot figure out a solid 5 waver. I mean, this would be, yeah, not, from this low, we're looking at the correction from yesterday's highs, right? If that were to be the low and you were to finish a move here, you literally got 1, 2, it just doesn't look great. It looks very 3-wavy. As you know, I never in a million years I would say this is the low of the correction and this is the high of an impulse, right? It's just not how it works. So I wouldn't say that this is the local high. If this has been the low, that's it, right? And now we move down. It just doesn't fit in nicely. If I were to speculate on this one being the low, and this has been a running flat situation right there, that's the high of yesterday, that's your running flat correction, then I need to figure out to see if this is a solid 5 waver. And I could say that you could fit in a contracting diagonal here. You could fit in a 5 waver. Very, not the most beautiful, not the preferred scenario, I have to say. If you have other more symmetrical scenarios that does give you a good chance that you could break out, then I would give that priority. But it would have to be a valid option, I have to say. If you formed a lower high here and then you just move down very aggressively in the next coming hours, I would have to give this the option. Like, okay, well, ended up in a contracting diagonal 5-wave move up, but I'm not prioritizing this at all. This is why if it were to look very good, I would say, yeah, I'm getting into a short here, guys. This is an epic short. Stop at the highs. That's it. Would you give it an attempt? I mean, you could always get in with peanuts. It's all about risk management, not risking too much, because we are at a zone based on the higher time frame that the price could roll over, right? It could roll over, but that's the beauty of understanding the 15-minute, the 5-minute time frame, because some people, let me know in the comment section, right? This is a bull flag, right? You got a pole right there, and this is a bull flag. It's going to pop out, go to 94k plus, right? It's a bull flag. You got those kind of analysts, right? If you wish, they're saying this is a bull flag, man. We've got to move up sideways. It looks very corrective. We're looking for a pop. And then you got on the other side the people that are looking at this getting exhausted, right? This is getting exhausted, or you're forming a Bart Simpson pattern, right? Which is a pattern that's very well known in Bitcoin. It's getting exhausted. This ain't going nowhere, right? It ain't a bull flag. So you got very, very mixed sentiment of people that do basic analysis. It's a bull flag. It's going to pop out. That's it. End of game. And if it pops out, then I told you it was a bull flag. And then you have the people that say it's getting exhausted, it's forming a Bart Simpson, right? It's going to roll over. It doesn't really matter what camp you are in. It's understanding the risk management, right? It's understanding where to position yourself, where to have your stop loss, and just accept if you were wrong, if you were right, but having good risk management at the end of the day, right? So I wouldn't play around too much here based on adding to short positions or adding to long positions, right? Because we are at a zone where the price is finishing this range, and it's either going to pop to the upside or it's going to pop to the downside. We've already tested the highs. I don't like how we have created this high just purely based on timing. I don't like how this high has been created, either from this pivot, which would be a contracting diagonal. It's very quick, very shallow, but I would have to give it a valid count. So for me, that's higher probability that we squeeze out. Okay. And the main reason why for me that I do see higher probability to squeeze out is basically the triangle structure that I've just mentioned. Very, very nice triangle structure. Possible first wave one hitting the highs to only form a higher low and pop out in a third wave. Obviously, you need to understand where are your entry points. E wave of the triangle, possible second wave, golden pocket 7-8, max level, and obviously not long in here, right? After the move has gone up $500, right? When we consider scalp and day trading. So what are the scenarios, right? Because I have to give something. If the price does move down here, I have to give an explanation of, okay, well, you know, that was an epic short in the end. You know, if you feel happy that this is the double top and you believe that you're going to form a lower high, look no further. Your invalidation is the high, right? You do not want to be positioned in a short anywhere in this zone, right? If the price breaks up. So, you know, if you are happy to believe that this has been a legit double top liquidity grab, and you're getting the bounce right now just to get a good entry, you know, you just need to understand the risk management side of it, because I know a lot of traders would just get into a short here and not have a stop loss and say it's going to reverse at some point and give that, you know, have that hope and maybe even add to the position, right? Just very common. I see it every day, you know, even on YouTube, right, from other people. Just to build up, you know, big positions. You know, they end up at some point getting, I can give many names, guys, that you follow as well, I'm sure, that end up, you know, literally taking a big loss just because of poor management. And obviously leading that poor management to the viewer, right? Which is not correct. They're the ones that should be getting strikes, not the ones that are providing, you know, education and good risk management tips. No financial advice, but so what if the price rolls over from here, right? Let's stay out of speculation of moving up or down, right? What if we do form a lower high and the price, you know, moves to the downside here? What other pattern, what other levels, what other scenarios would I take into consideration? If we do take a look at the session volume profile, let's just get some levels here of support. I mean, even not with a session volume profile. Yeah, we're just basically in the range here. Basically in the range, you would say value area low. I wouldn't be too interested, me personally, in these SFPs. I would not personally be interested. If the price were to roll down from here, yes, you could get a reaction on one of these higher lows. If you're an intraday scalper, then, you know, it could give you an entry just because it's the value area low of this range of the last 24 hours. I mean, this one, yes, as explained, if this is a wave one and you get a very, you know, steep zigzag, just missing this low by, you know, a few $100 or so, I would treat this as a possible entry. You need to be quick on this one because your invalidation is this low. It's very tight, and the projection of hitting the highs is good, based on the 1, 2, 3, 4, 5 possibility, right, that we explained at the beginning of the stream. But yeah, if we were to roll down from here and lose this low and hit this low, I think with the price would very, very likely sweep this low and this one. You know, just if it does get some selling pressure and you lose these higher lows, you know, it's just like saying that we're breaking the uptrend line, right? I wouldn't be too interested, me personally, here for a long position. I think the price would very, very likely sweep all of the higher lows of the range. So this area would become a non-longing zone, and I would just wait for, obviously, the price to come down to bigger support levels. Oh, I mean, the lows of a range, the ultimate lows and highs of a range, they usually provide a good entry, such as the highs, at least for an entry, right? Regardless if the price is going to continue in the other direction or not and break the range, right? You know what they say, trade the range until it breaks. So the highs and lows of when you start forming a range, they do usually provide a possible intraday setup, So this would not be an interesting zone for me to speculate on a scalp. Literally between 90.8 and 90.4k. However, I would treat this level as a possible SFP intraday, right? Getting a bounce potentially to the valley area low. Not a massive move, but this is a $400-500 move possibly that could happen. And I would treat it as a quick execution, right? We're not here to speculate that we are going to go to much higher levels and we're going to hit 100 and somebody said in the comment section today 106k and then we roll over. It's like we're trading at $90,000, we're $16,000 away from 106k. We're trying to figure out possible opportunities inside of the zone, right, where the price could reject, where the price could bounce to, possibly scratch some dollars. So man, 106k, man, if we were going to be talking about 106k or all-time high or come down to 60k and stuff like that, we're very far away, right? It's kind of boring. We want to get a little bit of action and possible scenarios, create some interest, local plans, just levels of interest where the price could get a reaction. So out of speculation, I prefer the scenario that we form a higher low, that we formed a triangle. It just fits better into the analysis and the symmetry. The symmetry fits better that the price does after this big sideways range that we formed in the last 24 to 48 hours is a correction. And the price is ready to squeeze out a little bit to the upside. That's my preferred scenario. Eventually, it does not need to happen, of course, and the price could roll over. So if the price were to roll over, it's one of those. If you did not get into a short on the SFP, it's one of those that I would miss. I'm out from the position that I had yesterday. Because basically it was a double top in this region. The price did come up to entry and we're just following the range, and I'm studying the range to see different opportunities to re-enter the short. And I'm just remaining a little bit patient right now based on this information. I'm very much aware that there is a good chance that the price squeezes out, right? So this is why I'm no longer in a short position. I'm just not positioned in a short. Got out of the short yesterday with getting stopped out at break even, and with that new short, I'm interested in shorts, but with the new information that we got in this range, I'm not liking a short here, right? I'm not liking the entry of the short. Based on the triangle, based on the first possible 1 and 2, and now in the next coming hours we get that third wave. I am very much aware that we could be heading to $93,000 or $94,000, and then we'll study the momentum once we get up there. But what I need to be patient on is getting that third wave and then the choppiness to the upside. The main reason I got into this double top yesterday is because you had the third wave up with the highest amount of volume, and then you have 1, 2, 3, 4, 5 possibly here, because the best way to label all of this from this correction right there, right? Let's just to get a little bit of noise out of the way, this is the correction, and this move right over here starts from here, right? It starts from here. So when I do check the volume and the breakout, right, you've got that increasing volume on this movement to the upside. If I wanted to speculate on Elliott wave theory and look for the fifth wave, and fifth wave, you need to have some kind of sideways momentum. You need to count the fifth wave as well. Out of speculation, how I would like to label this is like that. And this is basically what I was eyeing yesterday. That if you're forming very corrective structure, I'm interested in this scenario. When we do take a look at the lower time frame, you got the bigger wave, sideways stop, right? This is what we are talking about right over here. That could happen, right? I don't know if it's going to happen, but it could. based on this triangle here, right? So what happened here is you got the movement up, the correction, bouncing at the 50% to the 7/8 Fibonacci. That's what you want to see your wave twos. This is the same explanation. It just got below the golden pocket, right? This first wave got to the golden pocket, 50% to 7/8. That is the zone of bouncing. This is why, if you do have a solid possible triangle, this could be a higher low, right? This area could be a higher low when we were considering the triangle. A, B, C, D, E, first attempt, double top, possible higher low between the 50% and the 7/8 Fibonacci, right? That would be the zone where the price would bounce if this is the correct count, which, you know, you obviously never know if it's the correct one, but you could have some hints, right? You can have some, you know, possibilities of saying that, you know, it is very much a valid option. I would know where to enter. I would know where to put stop loss. So after this movement up, this is why, you know, this first move to the upside, you're going to get the price stopping at some point. The price is going to create a stop after getting the move up. It's going to happen, right? You don't know when, but you don't need to, right? You just know it's going to happen. Once that stop happens, you are labeling a possible wave 4 because the highest amount of volume has happened in that wave 3, right? You always prioritize the biggest move with the highest amount of volume, a wave 3, because it's the most common way on how the chart moves. So in this case, the price did stop. And once you get, you know, the price continuing to the upside, you know, it's your plan to figure out where that fifth wave could finish. And you might say it can double top. You might just hit the highs. And it, you know, if you wanted to enter here, your stop loss is here. That's it. It is what it is. But if this is going to be the high and it does end up rejecting, you know, it's a very, very tiny stop loss. However, you got the price action moving here. And if you do see right there, this was the biggest move up in the end, right? So you're not interested in doing anything here, right? The price is shooting up and it's maintaining above the recent highs. And it's, you know, it's going to stop at some point. It stopped, formed a very choppy sideways structure that looked very corrective, and then it claimed the highs for the double top scenario. This is a valid double top. It might have squeezed out, maybe, I don't know. But if it double tops, I realize that, you know, this movement to the upside could be a 5-wave structure from the 5th wave, right? If we're going to label this right over here in mini, right there, just so you can see it. Let's get the drawing out of the way. Okay. But from this low, 1, 2, biggest move in the 3rd, you got your pretty solid stop. And this is the 5-minute time frame, guys. So, you know, you need to take this always with a grain of salt because it's, you know, there's a lot of information. And then you got this 1, 2, 3, the biggest move. If you're breaking the local highs, you're just not interested. It's going to stop at some point, and that stop will provide you the information, right, of forming the range. And now you have a solid 5-wave move to detect the 5th wave of the 5th wave to maybe get into the short. And, you know, that brings the speculation of trying to, you know, figure out this scenario right there. If you formed after you know, a possible impulse here, right? Impulse up and a big sideways correction, you know, for the moment we're labeling this as a correction. There's no big impulse down or anything, but it's gone sideways. You have a valid triangle that's had the, you know, attempt of breakout from the highs. And it just doesn't look too great to enter that short, at least, in, you know, in my understanding, you know. And I do realize that the price could form a 5-wave move to the upside, and this is not about being right or wrong, okay? It's not about being right or wrong, but it's about understanding where you have the possible entries, right? What you're looking for. You're literally looking at detecting a 5-waver where you possibly have your wave 1, wave 2, wave 3. If you squeeze out from this high, I have no reason to enter a short in this zone. There's not much resistance unless it double tops. I have to say, a double top, as SFP, if you can get in at the highs on the rejection, then it's just a valid entry, just because your stop loss is so small. If it gives you the option, you just attempt it, because the risk management is so great on SFP's double tops. But if you were to break through here, I have absolutely no reason at all to enter a short here. There's no reason at all for me, with my analysis and levels and understanding, that I would want to enter a short here. The moment that I would want to speculate on a short is once that breakout stops at some point, which it will, and forms a corrective range. The next attempt to hit the highs, if this is the biggest move with the highest amount of volume, is the moment you need to detect that 5th wave. You need to detect that 5-wave move up in this region, hitting major levels of resistance. In this case, we would have the previous yearly open, right? So that's, you're kind of projecting how the price could move, because this is how it moves most commonly. So in this case, we have the previous yearly high, right? Previous year open, sorry, which is previous year close, inevitably, right? I don't know if the 3rd wave is going to finish at 93. It might squeeze out to 94, right? But what I need to see is the stop, and then obviously take into consideration the levels that I have above me, to speculate on that 5th wave getting the rejection at one of these levels. Might be previous week open, which is at 94.1. If you have a naked point of control or some lower highs for an SFP, in this case we do have these pivot lower highs where the 5th wave could reject, and that's what you're literally looking for, right? This is a little bit of the scenario that I'm looking at here. And if the price were to roll over from here, for intraday scalp, I wouldn't treat this low as this is the low to claim the highs and break through, which it could. It just gives you a good entry. I would treat this as a scalp, and I would treat it as where's your first level of resistance. It would have to be the session VWAP for all of those scalpers out there, right? Session VWAP, and the value area low of this trading zone of the last 24-48 hours, which would be SFP of this low. You might get an instant reaction bounce, but you just need to understand that you just want to be defensive, right? You just don't. The stop loss is clear, the entry is clear. The risk management is very, very good. So it's just a good entry. If it does not reject from here and it goes to the upside, well, you got a solid entry, right? You've taken some profits out of speculation. Obviously, not speaking for anybody here, but it's just a good entry, right? Range highs, range lows. They always, not always. Sorry, my bad. Not the correct wording here. They do a lot of the times, right? Provide a possible reaction, little SFP, right? There will be a moment that you'll break it. In this case, I am favoring the bullish case based on my explanation that we're probably going to break to the upside. until it breaks, you can attempt the range high, you can attempt the range low. It might not break the range low, and it might actually form an SFP and break the highs later on. And this has been a more sideways WXY structure, where you have a flat, you have a zigzag to the upside, and another zigzag to the downside, right? Because that is possible. Where you see a triangle, you could see a sideways WXY, right? Which is this is why you need to have many alternatives. If the triangle is not the pattern that is going to be developing here, which is for the moment the one that I'm giving priority, just because it's just nice, it fits nicely based on the timing, based on the push up that we've had. I'm prioritizing this until we get a move down and hit levels of resistance. So as prioritizing this scenario, that you're looking for the highs to be reclaimed and possibly break out in that third wave, where you have your possible wave 1, wave 2, wave 3. It ends up squeezing out in the next coming hours and going to higher levels, right? 4, 5, just let it go. It will get exhausted at some point. You will form that fourth wave at some point. What if it does form a lower high here and it moves down? What other options do you have, right? And it's all about having many options when you're trading. It's all about having, I know with unexperienced traders, you would only be blinded on one scenario, only on the bullish case, only on the triangle, only on, moving up, and not having other plans. And then if you do get stopped out, right, if the price moves down from here, you'll be like, oh, what's happened? What could we have? What other scenarios do I have? Because I really thought that this was a triangle and this was going to break to the upside. And if it happens, you will feel like, oh, I'm the best. I predicted this. And if it doesn't happen, you'll be like, well, what's developing, right? What's developing? You always have to have that. What could develop if you do not move to the upside? And considering that this is a very, very choppy rangy, and I personally do not like this to be the high, first of all, because you need to like the high, right? And I could be completely wrong on this, right? It maybe just nukes down here. We end up forming a Bart Simpson pattern, right? And it just really nukes down from here. Very, very valid option. Very, very possible, I don't like this to be the high though, if you ask me, and I would rather consider other levels to speculate on a bounce, right? Speculate on a reaction bounce. There's a good one as well, which is this fair value gap, which is this higher low, which is absolutely awesome. These levels, these fair value gaps, they are really, really nice to get into a position if you get the reaction. Because this big green box right there, where you have this big fair value gap on the lower time frame, bear with me here, guys. This is the 5-minute time frame, right? If you did not get a reaction at this low, so just let's, out of speculation, the price moves down to this area. This is a very, very common zone to get a reaction. It's just very, very common to get a reaction and some kind of a local bounce, be it a few $100 or maybe it ends up forming a few $1,000 of a bounce in the next coming days. But it's a zone that you do not want to lose. This area is a zone, the main reason I got this green box here is because, and putting this cross, is that this area would be a zone that you wouldn't want to be positioned, because what is very, very common, if you lose that higher low, you're likely going to fill the gap, this fair value gap, right? You're likely going to fill it just because you haven't left any good support. And especially when you take a look at the session volume profile. So it's either react and bounce. We talked about this yesterday, I think. It's either react and bounce or it's lose it. Because look at this session volume profile. There's literally no volume here. There's nothing. And it's very, very common. I could show you many, many examples on these type of, well, yeah, I think we talked about it yesterday, actually, when we were talking about the daily or the 4-hourly time frame. It's the same as this on the higher time frame, 4-hourly daily time frame, where you have that mainly on the daily, because this is a fair value gap right there, right? From here to here on the daily. That's a big gap that if you do break this first dead cat bounce on the higher time frame, if you do break this level, you're likely going to fill the gap till you actually get to some levels of support here, right? Which is in this case 120k. So this is a no short zone. This is a no short zone if you break successfully. However, you can short the rejection. You know, you can enter a short if you wick above the lower high in this case and you fail to break it. But you're not shorting in the box area, you're shorting beneath it, and your stop is above the fake out, right? Your stop loss is above that wick. This is the same explanation. I mean, there's many examples, and there's examples of this not forming an SFP and breaking through and filling the fair value gap. We could find one right now, guys, very, very easily. You know, if we zoom out. Yeah, basically, this would be one, maybe on the higher time frame on the 4-hourly, but you can see you got this mainly on the daily, because there is an order block right there on the 4-hourly, but pretty aggressive, fast move down. First big, you know, major bounce. You can see if that doesn't hold, you're likely going to fill the entire move to the downside almost, right, till you actually get to one of those pivots, lows, and that can provide, you know, that resistance. So, you know, it's either reacts at the level, or it either blasts through, right? So this is why talking about this area, it either breaks it, okay, and then obviously you got these this level of resistance, right? That would be the end of the fair value gap in this case. You either hold it from that higher low, you either hold it and bounce, or you break it. It might be a shallow bounce and then you reject. It might be the low, you form a higher low and then continue higher. You just never know, but it's a zone where you have a solid entry and solid risk management a lot of the time. So yeah, that's basically keeping obviously a little bit of education as well here. If the price forms a lower high, these in this area, I need to consider a few options. If the price rolls over from here very aggressively, right, with high volume, and it just continues collapsing, you know, I would have to say, you know, I missed this short, and I would have to wait for a solid value, you know, valid 5-wave count here, and then look for the corrective bounce to position myself, right? Because if this is going to be the high on the higher time frame, when we're speculating on, you know, looking at a 4th wave, right? Because what we're looking at here potentially is forming a lower high on the higher time frame, and it's all about trying to detect if this has a possibility of topping out here, which is making it a little bit complex. And it's with the information that I've provided, I don't like this to be the high. I don't like this to be the high personally. Could it be the high? Is there a valid count? Absolutely. It would be that contracting, very small diagonal, and you just have to you know, accept that this was the leg up. That was it. That was the 5th wave, which is not, it's not nice, I have to say. it's not my favorite. This is why I'm rolling out this being the high. I just don't like it, me personally anyway, right? If you are happy, you know, your invalidation is the high. You know, if you break out the recent highs, You just don't want to be positioned right in a short if you break the local highs. You know, why would you? You just don't know when the price is going to exactly stop here. So it's not, it's poor risk management, right? But if you were attempting this, if you're saying that this is the lower high, your invalidation is the highs, right? So just manage risk accordingly. So, if I miss the short here, I would have to look for a solid impulsive move down in a 5-wave structure and a very, very corrective overlappy bounce in the next coming days that I can detect and be interested in shorting the possible wave 3. You know, we'll be looking. I'll be doing days. You know, I'll be doing a lot of. Well, if YouTube doesn't want to give me a strike, we can talk about the probabilities once we get more information. For the moment, I like the scenario that we move higher, guys. Okay, based on the triangle, based on this being corrective, based on it wouldn't make too much sense for this to be the high on the explanation that I've given. That's what I prefer. Right, that's the scenario that I lean more to based on the probabilities. And you know, if we were to move down and get this very, very choppy corrective bounce after an aggressive move to the downside, then you know I'll be around. Obviously, this is probably not going to happen. It will take time, and then obviously say, guys, well, you know, if I didn't short here, I'll probably be shorting here, right? To then get into the larger third wave down, right? 4 and 5. So you don't need to catch the exact high always, right? It's like, you know, anywhere in this zone, you do have the options of this being multiple 1-2s. 1-2, 1-2, 1-2, right? Third wave, now 4-5, 4-5. Yeah, you don't need to catch the exact low. There will be a moment where you'll have some moves up and sideways overlappy structure, and here you can take a decision when you realize it looks corrective, and position yourself. Maybe this one right over here, this was a clear correction once you formed this price action right there, right? You literally didn't break down. Very 3-wavy, lots of overlappy structure here. You had a good chance that this was a kind of a bull flag, you know, if you wish, in simple terms. I'm going to go through the comment section. I haven't checked out the comment section, so I wanted to talk about another scenario, because I mean, there's so many, guys. There's so many. The main reason why this could be actually a good level for a reaction is just the lows of the range, and if you break that zone, you got the point of control from Wednesday, sorry. It's a naked point of control when you do get the session volume profile from this range. It's the highest volume node. It's a good reactionary zone. If you lose it, you're not interested. If you react to it, it could be the level that bounces if you do get down there. And out of speculation, you know, I could label all of this as a running flat, which is not common, a zigzag move to the upside right over here, and another zigzag to the downside, forming a WXY, running flat, zigzag up, zigzag down that sweeps the lows, and could either SFP from this low, or maybe, you know, squeeze down a little bit more shaky. You suddenly get that big mass move, right, where everybody's like, holy smokes, we're breaking down. If you have your levels ready, if you have your plans ready, you understand that you could either SFP of this, you know, this point of control, tap and go kind of thing, or even SFP from this low. And you know, that's also a possibility, because when you can fit a triangle, you can fit a sideways corrective structure very likely as well, which in this case would be a WXY, running flat, zigzag up, and a zigzag down, just to sweep up the higher lows to then maybe get the momentum back up. So I mean, that's an option, would be running flat, zigzag up. If it were to lower high here, a very steep, it's either SFP of this low or it's either SFP of the point of control, tap and go kind of thing. These are your guidance levels. If you're beneath it, you're not interested. If you tap it and you get above it, you're interested. You've got good risk management, right? If it's not this one, it's this one. If it's none of them, then you stay away, right? That's they're guidelines. These levels are guidelines, basically. It's not about you said we were going to do this or you were going to do that. It's at this point, when we're talking mainly about day trading setups today. Today's been more of a day trading session, but it's obviously giving that education on figuring out how to create those plans. Elliott wave theory is very complex for 90% of the people, right? There are 80%, 90%, but it does give you that edge on looking at for trading setups and probabilities. Anyway, let's go through the comment section. So that's another option as well, where you do form a more of a sideways WXY, as you did form a flat here, and this could be a zigzag. You could form a little bit of a sharp zigzag down to either sweep up this low or even hit the point of control, and then it gets the bounce. So obviously if it does get the bounce, it could be a wave 1, 2, 3, 4, 5, or either this one right over here, where it sweeps that low and then it forms the 1, 2, 3, 4, 5. And that gives you the aggressive entry. And the conservative entry is after the bounce. If it is going to be very choppy, very three-wavy, very overlappy, then if you don't enter on one of these SFPs, you need to look for an entry possibly on the higher low. I mean, it's just, like I said, I'm favoring the triangle right now. Where we at? For me, there's no solid position to be taken. If you're going with the momentum here locally, you're either looking for a higher low, and if you're looking for a short, it's an SFP. This whole thing about we're going to go to 106k and reject later on from there. Well, yeah, okay, that's fine. Let's go through the comment section, say hello to the beautiful community and see what's going on. I'm about to barge into the studio. I know he's here. I got CBM here. He's been knocking on the door, but I had to do the live. Chartists, have a blast. Rudy, much love to you, my man. Thanks for joining the stream. Very helpful explanation. Nico, you're very welcome. We do keep this educational. We keep it nice. Guys, I'm going to go through the comment section right away. Anybody that is not aware, I've been testing out a decentralized platform, guys. This is awesome because there's no middleman. This is the awesome thing about Velto. Velto, in my opinion, is the upcoming Hyperliquid. Okay, and I think it's a great platform. I've been just testing it for the moment, and it's really easy to connect to the wallet. Super easy, friendly platform, very similar to Hyperliquid as well. And I have to say, I think we are moving slowly into a decentralized world, and I will start more trading on decentralized platforms in the future. Okay, anybody that is interested, you do have the link down below if you want to test it out, guys. Because what is the beauty of decentralization? You have full custody of your your keys, basically, right? There's no middleman. Anybody that's interested in testing out Velto, guys, check out the link down below. Okay. All right, it's this one right over here, my go-to decentralized platform. All right, and check it out, which is awesome. Obviously, I know I still trade on Bluffin, BTC sometimes. I still got some, I do trade there sometimes, but Bluffin has been my main one to go, and you also get some great perks down below. If anybody's interested, they are affiliate links. Okay, may earn a bit of commission. But it's at no cost for you, okay? And Bluffin, these centralized exchanges are not going anywhere for a long time. So, you do have some great bonuses down below in the description. They are affiliate links, okay? Make sure to read down below what you get. Let's go through comment section. We've got CBM here who's knocking the door because he's going to do a video update. And yeah, it is Friday today, so make sure to enjoy the weekend. Thank you very much, everybody, to join. Mark Dutch, my man, here he is. Metis needs, I actually do hold some Metis. I do. This is one of those altcoins that I do still have in a bag in the dust. I have about 23 or 24 altcoins, guys. Of course, the altcoins is less than about, I would say, 20% of my entire crypto portfolio. On some altcoins, I mean, I've been holding some of these altcoins since the previous bull run. It did get a pretty interesting push to the upside. Metis needs an umbrella. Yeah, Umbrella's gone down the toilet. Cadena's gone down the toilet. And some other ones are just not doing that well. 20% is pretty high risk. I know a lot of people allocates a lot more into altcoins. I'm 60%, more than 60% Bitcoin, about 10% Ethereum, 10% Chainlink, and about 3% right now ICP would be one of my largest. I did dump some ICP when we got above $8 in the last couple of weeks. Luckily, you know, it was a good exit strategy. We did talk about this on previous streams because it's one of those altcoins that I decided to buy quite a bit in this range. Me personally, obviously, I'm not, you know, I just said I like ICP, great project, there's that, the other. Accumulated here, you know, decided to put, it got all the way up to 5% of my entire portfolio, which is, you know, for an altcoin, that's a lot. And man, I was devastated with this move. And we got this pump a few weeks ago, and oh man, you know, I had to get out to get my, you know, basically my investment back. And now I have a kind of almost a free bag. So this could go to zero easily, and well, it is what it is. But at least I got a free bag almost. So anyway, yeah, these altcoins. What can we do? We need to trade ourselves into profits, right? At the end of the day, what we're looking at is to look for trades safely, responsibly, and try and, you know, Mark Dutch. Much love to you, my man. Staffer One, Mark Dutch, providing love and support. Much love to everybody. Okay, legends, it is Friday. Smash up the like button. Let's do a like recount. Okay, 143. I mean, it's been a bit quiet today. We've just been over 300 watching. About I think we peaked out at 400. It is Friday. Markets are pretty slow. No big major news. Not much that we can talk about related on news. But yeah, it is Friday, bit of a slow market. Thank you very much for everybody to join. And, you know, we got some levels, we got a few plans, a few scenarios. Be cautious. I do like the idea that Bitcoin does push up. I like that idea, guys, obviously. You know, we know the levels, we know the reactions. Hopefully, if you've been paying attention, because, you know, one of these scenarios could definitely come to fruition. If we do pop out, I think we need to wait for that exhaustion. If it pops out from here, we need to wait for that third wave, exhaustion, fourth wave, right? And then later on speculate on the price getting exhausted. If we were to lose down here, you got the levels, okay, that's been explained. Trade the range until it breaks. Range high, range low. It could SFP from the lows. Just pay attention. If it breaks, you got a point of control right down here at 89.9K. And yeah, if it just goes lower, then I have to say that I will not be in a short position, and I'll look to enter a short later on in the next coming days if we can detect a corrective bounce. Thank you very much for joining, guys. Much love to everybody. It is Friday. Make sure to enjoy with friends and family. Go out. Don't drink too much. If you're underage, don't drink at all. Take care, everybody. Thank you very much. Have a great Friday. Devil, my man. Much love to you. Devil's a legend. We're all legends here. Take care, guys, and see you in the next one.